What's going on, guys? It's Cody. Today we are going over the fastest and simplest ways to build a strong credit profile for funding. This is perfect for anybody that's young or just going through the process for the first time of building out a credit profile. Or if you are in the credit repair process or had your credit recently repaired, these are the steps necessary to kind of get yourself back in the game and be able to receive business funding. And real quick, guys, if you are dealing with negative items on your credit report, whether that be inquiries, late payments, charge-offs, collections, all of those sort of things, that is exactly what my team at Signature Boost handles for over 600 active clients every single day. And we would be happy to take a look at your file to see if we can help you out. Now, back to the goal of building a fundable credit profile quickly. Let's get into it. So here is the checklist of really what the banks are going to be looking at when it comes to your personal credit, because that does tie into business credit and business funding for the future. Now, when it comes to business funding, you are going to serve as what is called a guarantor for the business. Think of an 18-year-old getting a co-sign loan from his mom. The mom is basically putting up her credit as the collateral to the bank, saying, hey, look, like, if he doesn't make the payments, I'm going to make the payments because I have good credit. And even though he doesn't really have good credit, you can give him the loan because we're both responsible for it. It's the same thing when it comes to being a guarantor for a business. So before you do anything regarding business credit, building a business, any of those things, you want to make sure that your personal credit is in line. So that way you can actually vouch for your business when it comes to business funding. Now, what does having your credit in line actually mean? One thing the banks want to see is a high credit score. It's pretty self-explanatory, 700 plus typically. They also want to see low utilization on each account, meaning that they don't want to see any of your personal cards being maxed out, because how are you going to vouch for a business and the business credit lines have higher limits? How are you going to vouch for a business that you're not going to go just max out those credit cards if you've already maxed out the credit cards that are on your personal credit? Another thing we want to see is a minimum of 4 open accounts. You're not going to go and get a $50,000 credit limit on a business credit line if you only have a $500 credit limit of your own, personal credit. So they want to see a minimum of 4 open accounts, and we'll get into what each of those accounts needs to look like as we get through this. They want to see an average of 2+ years of age. How do you do that? I'll show you if you don't have lines yourself that has 2+ years of age. But they definitely want to see that. They don't want to see someone with a credit profile that just looks like they were on paper born yesterday. They're not going to have you vouch for a business and get super high credit limits. They want to see no negative items. They don't want to see you get too far ahead of yourself on trying to fund a business if you've got negative items on your credit report: charge-offs, collections, inquiries, late payments, that sort of stuff. They want to see 110,000 high limit credit card minimum, okay? Again, they're not going to have you get a $50,000 credit limit on a credit card for a business that is not on your personal credit if what is on your personal credit doesn't have anything relatively close to those higher limits that you're looking for. That's actually what it's called. They're looking for something called relative limits, which means that if they're going to approve you for a high limit on the business side, they want to see a relatively high limit on the personal side. And they want to see a max of 2 inquiries on each bureau, okay? What that means is you don't want to rattle off a bunch of applications at once, or if you want to get the inquiries removed as you go, because if you have too many inquiries on your credit, you'll get labeled as credit seeking, and that will completely ruin your odds of getting high limits or getting approved whatsoever. What are the steps to this? For the sake of all of these examples, we're going to say that you have no credit whatsoever. You're a 0 score, you have no accounts on your credit. We are starting this for the first time. Either you're fresh out of repair or you're fresh to credit altogether. So we want to start with a credit builder account. If a bank looks at your credit, because this is going to be the first account that's on your credit, when a bank looks at your credit, if there's nothing on there, they have no idea whether you're going to pay all your payments on time or none of your payments on time. So how we get past that is starting with a subscription-based credit builder account, okay? These are to begin the credit file and start with what I call an installment mix, okay? Banks want to see a mix of credit. If you look on Experian.com or your Experian app or any of the credit apps, they rate a mix of credit, which means that they want to see some loans. They want to see some, they want to see some installment loans. They want to see some revolving credit. They want to see the mixture of not only do you pay your credit cards, but you also pay your car loans. And not only do you pay your car loans, but you also pay your credit lines. And not only do you pay your credit lines, you also pay your mortgage. So this will begin that mix. And these almost always have a guaranteed approval because they are not credit-based, they're subscription-based. So for example, let's say that you go with, here's a couple ones that we have listed. I've got links in the bio to all of these, and they actually come with a bit of a discount because of how much volume we send them. So you've got Ava, you've got Kickoff, you've got Self, those, and you can read a little bit more about them in the links. Credit Strong and Kobo. Let's say for the sake of this example, we went with Credit Strong. On your credit, it will look like you're paying off a loan, and it is you paying that subscription for them to post that to your credit. So now we've got one account posted to our credit. It's an installment loan, looks like we're paying off a loan. That's great. Step 2, now that we have that, some people advise you wait 30 days, 30 to 60 days. In my personal experience, I've had clients wait anywhere between 30 and 90 days. So that way they post 3 payment history records on that credit builder account. The more you add is great, but you don't necessarily need to do so. Again, what the banks are looking for is 4 accounts. We just got our first one. Step 2, we're going to go to an easy approval credit card. This is what I call easy approval credit cards, okay? These are going to be your actual first revolving account. This is going to be your first credit card. Now, we're not going straight for $10,000. These are going to be low limits, $500 to $1,000 credit limits, and sometimes they're even secured cards. Good options are like the Discover It card, the Citi secured card, anything, again, that will post to your credit, give you a second line. This one's a real line that will say, hey, I'm building real payment history. You can trust me. After this, you want to wait 30 days. Again, we want to let these accounts do what's called seasoning before we do more applications. I mentioned this earlier, but if you start firing applications all over the place and rack up a bunch of inquiries, your applications will get flagged for review because you are what is called credit seeking, which basically just means like, hey, I'm looking for money. Anybody that can approve me typically indicates that you are a frantic applier, and the banks get nervous about that. So that's why we wait. You want to build payment history. You don't want to do a bunch of inquiries all at once, so that way your applications don't get flagged for review. After that, we're on to step 4. We are going to apply for a personal card, not a business card, a personal card at a bank that you will later use for business funding, okay? This is what we call relationship banking. It basically means that you are establishing payment history not only on your credit, but with the actual bank that you later intend to use for business funding. It's kind of like a first date. So you're building that relationship with the bank for future use. Banks that do business funding that you would want to start a relationship on the personal side are banks like Chase, Amex, US Bank, Wells Fargo, etc. Okay. After you've got that first card, now you have one builder card that we started with. You have a credit builder account, and now you have an actual personal card. And these are with reputable banks that supply business funding later on. Now we're going to be waiting another 30 days. As we're waiting 30 days in between each of these, don't forget, now you're 30 to 60 days in on your previous card, you're 60 to 90 days in on the credit builder account. So you are kind of stair-stepping this process to build more payment history as you go along on multiple accounts, and the accounts are only going to get older, which is great. Now we're going for an application of what I call a premium card or a high limit card. These are the 10K plus goal that I was talking about. So that way you have a comparable credit limit for the banks to look at when it comes to business funding, okay? This is that ceiling for business funding. This is, on the business side, it's actually going to be the floor. You're looking for a minimum of 10K approvals on business funding. But this will show that, yes, you can handle a higher limit on your personal credit. Okay, good options for this are the Chase Sapphire Reserve, the Amex Platinum, a Wells Fargo Built. Credit Care is one of the ones that we've been sending to people that are giving consistent $13,000 to $15,000 limits, which is great. So now to review, we've got our high credit limit card, which is the 10K plus. We've got our personal relationship established with the business bank that we intend to use in the future. We've got our first line that allowed us to get to this point as an actual credit card, whether that be a secured card or a low limit actual credit card. And we've got our credit builder that is showing a good credit mix, allowing us to show that, hey, look, we're paying both personal loans or credit builder loans, secured loans, installment loans, and we're paying our credit cards. Now you might remember, Cody, we've got our credit score has gone up because now we've got accounts on here that are building new positive payment history. We've got low utilizations because we didn't just get approved for these cards and start maxing them out. We've got a minimum of 4 open accounts, but how do we get the age? Because remember when we started this whole explanation, this is someone with no credit whatsoever. They were a 0 score, the first account on their credit that shows that basically on paper, the day they were born was the day that they added that first credit builder, which is only 90 to 120 days ago, right? So how do we build this? You do so through the use of what we call authorized user trade lines. Okay, now these are not, you can't build an entire profile off of only authorized users. An authorized user is someone that is added as an account user to someone else's primary account. For example, if my brother or my friend had a credit line that they'd had for 10 years, and I said I wanted to be added as an authorized user to that line, they add me as an authorized user. Doesn't mean that I actually get the credit card, doesn't mean that I actually get to spend the money that's on the credit card, but it will post to my credit that I am on that account, which then will boost my average age of all my accounts, will boost my payment history, will boost my overall credit limits. And overall, it helps your file a lot because the only thing that we can't actually create on a credit file is age. This is a workaround for that. I have this labeled here as step 7. You can start this at the beginning of the process and it can actually help accelerate the time frame in between each step, or it can give you higher limits in between each step. So for the first personal card, as opposed to only getting a $500 limit, you might get a $2,000 limit or a $1,000 limit. Then when you move up to the premium cards, like an Amex Platinum or a Chase Sapphire Reserve, that might be the first time that you've applied for a card like that. But if you have an authorized user on there already that shows that you've had a previous $10,000 limit, or you're at least associated with an account that has a $10,000 limit, you might get $15,000 or $20,000 on your first time on that card. And overall, it can just help the approval process. If you want to wait until the end of the personal card applications to add authorized users, it's not a problem. It's just how fast you're trying to move throughout this process. So when it comes to authorized users, what are we looking for and where can you get them? If you do not have a friend or family member, you can buy them. Now you can buy them from places all over the internet. One, you want to look for a reputable source that has good client reviews. And 2, you don't want to end up in what we call a trade line brokerage, which is where these lines are not owned by the company, they're owned by outside investors. At my company, we provide over 200 active trade lines to our clients for purchase if you want them, and they are owned by people that work within our company, which means that you're not paying ridiculous brokerage fees, you're not paying stupid upsells, and you can get those through my company directly. All you need to do is message me or a member of my team, and we can get you an active list of what we have available. Now, for these lines, we are looking for something that has an average of 2+ years age across all of our accounts. We've already got 4, which means that we would be adding 1 to 2 authorized user accounts, which would bring our total number of accounts up to 6. This is where you're gonna need to do a little bit of math to figure out what really you need. You'll get some companies that'll try to tell you, they'll sell you a line for 20 years. You might not need 20 years. And clearly the older the line, the more expensive it's going to be. At my company, we'll do this math for you. If you're doing it yourself, just be cautious of what you're really spending your money on so you make sure you're getting what you need and not spending money on something that you don't. Like I said, you can get these from friends, family members, or you can pay for them. And if you're paying for them, typically they'll cost anywhere between $600 and $1,000 for 1 to 2 lines posted for a certain amount of time. Now, again, in my company, we don't charge numbers that are this high. You just have to reach out to us with with what you need. And if you don't know what you need, we'll take a look at the file and tell you what you do need and get you a price that's anywhere between 30 and 50% lower than that. So let's roll through some scenarios so that way you know how to get out of them if it sounds like you, and you know how to calculate the age of what the accounts you need to get are. So let's start here. Let's say you only have 1 credit card, and let's say that credit card is 4 years old. So 1 account is 4 years old. What do you need to do from there? You need to add 3 more accounts, as we talked about, to hit our 4 account minimum for funding. And we need to do the math here to help us get to an average age of 2 years across all of our accounts. So we've got 1 account equaling 4 years. We're gonna add 3 more, but because we just added them, those are going to equal 0 years, okay? So we've got 4 accounts total with 4 years in age. Our average here, quick math on this, is 4 accounts, 4 years, an average of 1 year per account. So our average account age is 1 year old. 1 year clearly doesn't work because we need to get to 2+ years overall. So how do we get there? We're going to add an authorized user, which would bring our total number of accounts to 5. We need the average age on these 5 accounts to equal 2 years or more, okay? 5 times 2 is 10, which means that overall we need to have 10 years or more of age to get to the average of 2 for 5 accounts. We already have 4 years of age, which means that we need to add 6 or more on an authorized user. So our authorized user account needs to be at 6 or more. Let's hit this next example. This client only has an auto loan, which is great because that shows that he can pay loans, but it's not the best because we don't know if he can pay credit cards. So what do we need to do? We need to hit our credit mix that I talked about earlier, a mix of installment and credit cards, by adding some credit cards. Let's say that this one auto loan that he has already is 3 years old. We are going to do 2 to 3 applications like we talked about earlier, 1 for a builder card, 1 for a personal relationship with a business bank, and 1 for a premium high 10K limit minimum. And we need to add an AU because now that he has 4 accounts total, the average is going to be less than 2 because the only account that had age on it was 3 years. So you add an authorized user to, again, help bring that overall age up to over 10 years of total age. So that way his average is 2 or above. For our last example, we're going to run this back from the beginning so that way you know that you really get it. Let's say you only have credit builder accounts. We need to treat that as a brand new credit file. We need to go for our builder card. We need to go for our personal relationship with a business bank card. And we need to go for our premium card. And if we haven't done this math enough already, we need to get the 5 accounts that we will have after we add the authorized user up to over 2-year average, which means that we need to have at least 10 years total. And as you can see in all these scenarios, it really doesn't matter what the scenario is. You can reverse engineer it by using the same math to hit that 2-year average. This is exactly what I'm walking people through when we go from the repair process through the approval process. Once you fix the credit structure, approvals become predictable. And again, if you're watching this and saying, man, Cody, I would love to be at that step, but my credit, I can't even make it past the no negative items part, whether you have charge-offs or collections or inquiries or late payments, you need to realize that no matter how many new accounts you add, you're not going to get through this whole process the way that you need to qualify for business funding with those negative items holding you back, which is where the repair side of my company comes in, so we can get those off and you are able to follow this very simple framework of getting yourself funded or having us do it if you want us to. We can help remove the negative items, rebuild your score, and help you structure your credit profile for funding the right way. So if you're looking for help with that, links in the description. And that's actually it. I hope this breakdown gave you a clear plan on how to rebuild a thin credit profile and then actually go get approved for funding. Drop a comment if this helped you. Let me know what step you're on. And as always, thanks for watching. I'll see you in the next one.